We're going to have a look at some stocks on the ASX that have too much exposure, or perhaps a lot of exposure, to China and a heavy reliance on China. So it's no surprise that we're having political stoushes with China at the moment because of the COVID-19 push for an independent investigation. Now, China's hit us with some barley tariffs, some really heavy ones, basically destroying our exports to China in terms of barley. And what's the other one? The education sector is being hit because they're telling their students in China not to come to Australia. So taking a big hit there for the education sector. And really, it's not just about COVID-19. It's also about the South China Sea. Now, we support the US in their freedom of navigation exercises. We support the US position that the Chinese don't have a claim to these islands. And really, it's just a political mess that basically we have to navigate with because we have a military alliance with the US and an economic relationship, a very strong one with China. So really, it really is kind of a mess lately. And China has been rattling the cage, and they're not shy to put some sanctions on Australia as they've already demonstrated. So the question is, what could be hit next? Now, China talked about hitting iron ore, and this was back in May. Now, I think it's a bit ridiculous to claim that they're going to cut iron ore imports because 62% of their imports for iron ore are from Australia. So really, it's quite concerning for a stock like Fortescue Metals if they ever act on such a threat. Because 90% of their exports, and this is a $50 billion company, mind you, 90% of their exports goes to China. So that would be a devastating impact, but the way global supply and demand looks at the moment, I don't see that ever happening. The two major mines in Brazil are down, causing a huge rift in the price for iron ore. And really, where's China going to get their iron ore if not Australia? So I think Fortescue Metals is quite safe, and in fact, they're really running quite hot in terms of profitability. So I don't see Fortescue Metals being under any kind of threat. I wouldn't consider shorting Fortescue Metals. At the same time, I also wouldn't consider going long, as it looks a little bit overextended at the moment. But in terms of the threat from China and cutting iron ore imports, I just don't see it happening. I don't see Fortescue being at risk of such a thing. Now, A2 Milk is another company that has serious exposure to China. 90% of their products is infant formula, and 90% of their revenue or sales goes to China. So this is more consumer-driven demand. It started with the Daigous, the people that legally bought infant tin formula. It was a bit of a problem back in the day, or at least the media made it seem that way. So you guys might be quite familiar with that. And of course, they just sell it and ship it off to China. And there's huge demand and quite a preference for A2 Milk products. So I don't think something so niche as A2 Milk, despite being a $17 billion company, I just don't think China would really target something like milk. It seems like a pretty niche sort of space. Now, they have threatened to cut wine and beef, which leads me to the next company, and that's TWE, or Treasury Wine Estates Limited. Now, this company has a very strong exposure to China. If we look at the recent report, we can see that in terms of EBIT, 153, that's in $1 million, I believe, is coming from Asia. Now, 50% of that is from China. So we can say about $75 to $80 million of the EBIT is through China. Now, that might be just under a third of the total EBIT, but the portion of actual margin and profitability, a huge chunk of it comes from China. Now, you can see based on the margins here, that's exactly the issue, is that most of the margins, or a big chunk of it, comes from China. And it's less profitable around the world, in places like America and Europe. So we have quite a strong reliance here on China. Now, they've threatened in the past, and as recently as the last 2 weeks, that they're intending on interrupting beef and wine in terms of import, basically cancelling all imports from Australia. Now, that's a verbal threat. Whether they actually push through on it, it'll be quite interesting to see. Now, I personally have shorts on TWE, and I've been adding to my short position on this stock for quite some time in anticipation of this actually happening. Now, there are some certain sectors and spaces that China just simply won't touch. I think iron ore is one of them. I think A2 milk, or milk products in general, is too niche. But wine seems to be a agricultural sector that can be hit. Now, there's one thing Australians love is farmers, right? Everyone loves farmers. Everyone loves the people that work in the agricultural sector as well. So really, if they're going to target beef, that will hit not only economically, but I guess in some respects morally as well. Because farmers are something that pop up in the news. Every time there's a drought, it's part of our Australian identity is the farming space, the farming sector, right? That includes agriculture, that includes things like cattle as well. Now, I don't know of any major companies, ASX listed companies, that have a huge exposure to beef. If anyone knows, feel free to post in the comment section. I'd love to know about it because I'd love to add shorts to that as well. But the wine space seems something that's big enough to hurt Australia economically without impacting China as much. Now, A2 milk, there's a real strong consumer drive for that product. I don't think that same drive exists for wine, particularly Australian wine. Now, I know there's an increased demand year on year, quarter on quarter for Australian wine, but it's nowhere near as dramatic as the demand for iron ore, and it's nowhere near as dramatic as the demand for infant formula in China. Now, looking at TWE, I've added shorts at the $11 mark, and I'd be looking to hold that for about 2 months. I think depending on how many political issues arise, I might extend that a little bit longer. But should China ever step in and say, we're cutting all imports from Australia in terms of wine, agriculture, or even for cattle, and that's a threat they've made. So I would expect a massive drop from TWE should that ever occur. Now, this is pure speculation. Now, I think TWE is one of the few stocks that's at risk from its exposure to China, but that's just my own personal opinion. So should it drop, I'd be looking at a 30% drop from these levels here, and we've already got a nice little sort of ascending triangle pattern here already. I'd be looking at a target of around, I was initially targeting around $8, $8.50. $8 or $7.50. So should those tariffs ever come in place, then I absolutely would be looking at a killer profit from my shorts there. So guys, I do have a position in this stock, and this isn't financial advice or a recommendation to buy or sell any stocks. This is just simply a quick view, quick analysis on stocks that have a strong exposure to the Asian markets, particularly China.